So, will the Federal Reserve be cutting rates again? That's the subject of today's video. And in fact, they're going to be meeting in about 15 days from now, and all eyes will be on them. Right now, the markets are predicting a 62% chance of a rate cut. So, a slight majority is thinking rate cut, but there is a possibility they could stand pat. Will they raise rates? Absolutely not. No one's even talking about that, so stop asking. Essentially, is rate cut or stand pat. We recently today have a couple of statements coming in from the Fed from both Waller and Bostic. I want to go over what they said. I'll share my thoughts on it, and I want to get yours as well. So let's just listen to this. Again, this is from Fed Waller. At present, I lean towards supporting a cut to the policy rate at our December meeting. So that's again coming from Waller. You got someone who's saying he's leaning towards a rate cut. This would be a 25 basis one. He also says here, but that decision will depend on whether data that we will receive before then surprises to the upside and alters my forecast for the path of inflation. So, will we get an inflation surprise where inflation spikes? If so, no cuts. So that's what he's saying. He's leaning towards cut, but watching the data on that. Now, one thing I want to mention is here in Korea, they actually announced yesterday, I think it was, that they're going to be cutting rates. So essentially, they're saying, hey, the economy's not looking so good right now. We need to cut rates to kind of spur growth. It's a different story in USA. They're like saying, okay, we'd like to cut rates, but we're keeping an eye on inflation. Now, let's just see what else he has to say here. He says here, Waller said in recent data had raised concerns that inflation may be stalling above the 2% target. Because remember, the Fed had promised they were going to, keep rates raised until inflation hits 2%. Then they'll talk about cutting, but they didn't really keep their promise there. And now they're saying it's stalling. He says here, there is no indication that prices in key service categories should remain at their current levels or increase. So I guess they expect inflation to cool on some of the servicing. This is according to Waller, but you're going to get different opinions on this stuff. I want to hear some other stuff he has to say. Again, this is Waller. He also says, I believe the evidence is strong that policy continues to be significantly restrictive. So in his opinion, and I laugh at that because rates, historically speaking, are relatively moderate. They're not that restrictive, but according to him, though, because people have been so used to the 0% kind of stuff for a while, or low interest rates, I should say. But he says, yeah, I believe the evidence is strong that the policy continues to be significantly restrictive, and that cutting again will only mean that we aren't pressing on the brake pedal quite as hard. Okay. He also says here, another factor that supports a further rate cut, so he's saying it again, further rate cut is that the labor market appears to be finally in balance, and we should aim to keep it that way, right? So they want to make sure you have a job. They want to make sure inflation's okay. The one thing I will say about this stuff, it's interesting that in these statements here, he's not mentioned the particular economy. I said here in Korea, people are worried about things are cooling. That's why they would cut. Inflation is the kind of big concern there in USA. And the other issue would be is, okay, if we raise it too much, would that discourage employers from hiring? But it's not like everyone's necessarily going to have the best job all day, every day. You have to keep things in balance, right? One of the issues is if you run the economy too hot, inflation gets too hot. If you run it too cool, right? There's not enough hiring and sort of economic cycle / people, spending, working, etc. This is also from Fed Bostic. He made a really interesting statement. It's actually like a long letter and stuff like that. And the key stuff that I thought was interesting was the talks of inflation. I'll read some of this stuff here. So here he's talking about inflation. This is from Fed Bostic, a different member of the Fed, and there's 12 of them. He says, a major factor contributing to the continued stubbornness of elevated inflation has been housing prices, right? And you guys know this. This is a really tough thing. The Fed can't really control it per se. They can, do the rates, but they can't go out and build you a bunch of houses, and they can't go out and rezone stuff to make things affordable for you, right? Or they can't go out and, get investors / Wall Street money out of your real estate market. So they can't control everything. But they do keep an eye on this stuff, and that's something that is important to understanding inflation, right? So housing prices, he mentions it here. So it's he says stubbornness of elevated inflation has been in housing. Again, coming from Bostic, he says, if one excludes the influence of shelter prices on core consumer price index for in October, for instance, underlying inflation rose at 2.3% at an annual rate. far more quiescent than the 3.3% reading when housing is included. So he's saying, if you talk about housing, which you got to talk about it, inflation is much higher, right? If you remove housing, which is, I mean, I get his point, but if you don't count housing at all, then you're closer to their target. But again, I mean, you got to talk about housing. You need a place to live. He also says here, if one excludes the volatile energy and food prices in addition to shelter prices from calculations, the CPI has risen just 2%. So I understand what he's doing. He's trying to make the numbers sound better than they are. Yeah, if we don't talk about energy or food or housing, man, inflation's fantastic, right? I laugh because like, from for when you talk about this for people on the ground, and sometimes the Fed can be disconnected just from regular people. I mean, how many of you out there say, oh, okay, yeah, inflation's fantastic if we don't include, my mortgage, my rent, my food, and, putting gas in my car, oh, everything else is going great. So you guys get the point. I'm kind of making a joke about this stuff. But they are talking about services and you could, and this is the interesting one, if they're going to try to make the case that services will cool, you'll tie that to people's wages, basically their jobs and their salaries. The issue is, and I always pose this question because I want to hear from people in the community. At your current position, do you feel you're getting paid enough? And what are your coworkers saying? Because, like, for example, the shoremen will be, I think, going on strike. Well, at least at the moment, we'll see if it actually plays out. Sometimes they'll get a deal ahead of time, but they're saying basically, hey, you're not paying us enough, and I think they're going to go on strike mid-January, something like that. And so they're not alone. There's a lot of workers out there that feel like they're not getting paid enough, which I completely understand. The other issue as well is I see a lot of companies that are firing, so there's going to be a lot of people struggling. So I know it's not funny to talk about that stuff's too expensive. It's just that's how I deal with stress of this stuff. But this is what they're saying. This is coming from Bostic again, more of how they talk, and sometimes I feel like they're disconnected from, again, this regular person on the ground. Bostic will say here, the main reason I am not alarmed, so he's not alarmed, good for him. The main reason I am not alarmed by the relative strength of shelter prices is that the pure market-based measures of rental growth from services like Zillow or CoreLogic have been much more muted than what has been calculated in the CPI and PCE. So I guess according to him, he's saying if you look at rental price growth, okay, in Zillow or CoreLogic, then it's doing okay. And I think it's going to depend on the market that you're in. Certainly, you can't raise rates forever in terms of your rents because you'll just run out of people who can pay that. And for many young people, we talk about this before on the channel, where they're just moving home. They're like, I can't afford to rent. It's not worth it. I'll just move home. But he's saying, and I haven't checked recently in the USA. I'm just telling you, I haven't checked recently in various markets on Zillow rents. Not something I track. And this is sort of why I like to ask you guys in the community, what's your urban experiences? I can just tell you here in Korea, which is really interesting, we're cutting rates. And I've noticed that there's a lot of still new construction, but it's interesting for us, the new construction tends to be more on the lower end. They've paused a lot of projects. And in fact, here in Korea, one of our big department stores is called Lotte. They're actually going to be closing down. Well, that's the rumor on the street. The announcement was they're going to be selling this massive building in prime real estate. And so it's this sort of indicator of things slowing here. So it's different, in your region, and that's also what the Fed is they'll have a Fed member of each region of the country, and they'll sort of report what's going on in their neck of the woods, and so what they're hearing on the ground, and then they put it all together and try to figure out where their economy is, and are people experiencing inflation? They'll look at data, or how are people and companies hiring, not hiring, etc. So there's all these measures that go into place when you're talking about what the economy is doing. And it depends on which region you're at, especially with for example, he's talking about rents and stuff. Real estate's all over the map in the USA, depending on which market that you're in. He also says here, and it's interesting to hear this stuff, the softening in market rents over the past year to 18 months should be eventually filtered through to the official inflation statistics and lead to lower readings. Okay, so he's saying this is a lagging indicator, and that if he's seeing softening rents and stuff like that on Zillow, then it'll eventually come into the readings. So that's what he's saying. So he's more confident inflation is coming down, according to him. A second reason why I'm confident inflation will continue its movement towards 2% is that I'm not seeing signs that a surge in economic energy, which could spark inflationary pressures, is imminent. Okay. Economic growth has been stronger than expected in recent quarters, yes, but the data and our contacts, see, that's what I told him about. They talk to people in their region. But the data and our contacts tell us that economic growth, like the labor market, is cooling. And I expect that to continue. These are interesting lines. So he's saying rents are cooling off, but he's also saying economic growth and the labor market is cooling. He also says here, along similar lines, aggregate savings rates are lower. People aren't saving as much. They don't have, money to save, basically, as are bank balances for many families. So he is getting to more to regular people, right? People are saving less. Your bank balances are going down. In short, the fuel that could reignite economic activity and inflation seems to be drying up. That doesn't sound good. The fuel that could reignite economic activity and inflation seems to be drying up. Okay. So there's different things you're balancing here is like, okay, we need to cut rates because like people don't have any money. We need to get the companies hiring you again, etc. And they're literally saying these things are cooling, right? The fuel that could reignite the economic activity and inflation seems to be drying up. He also says here, a fourth source of comfort lies in measures of inflation expectations, which many economists view as one of the most important factors influencing spending and investment decisions, right? Where people are putting their money. He says here, these measures, some of which we produce via our surveys, have remained quite stable and more or less in line with the pre-pandemic norms. Okay, so this kind of stuff, and this is sort of where you have to understand what's going on here. When you're talking about, say, investment decisions and spending, one thing that I've definitely noticed is the top of the economic scale may be doing okay, the bottom's not doing so great. And if you look at the numbers as a whole, as an aggregate, sometimes the ones at the top are spending enough to sort of cover up the pains that are happening at the bottom. Yeah, when I go through all this stuff, absorb it and share it with you, I think it just kind of goes along what I keep saying. I keep saying that there's going to be just the divide between rich and poor keeps getting bigger and bigger. And this happens with any company. So we'll just use an example of Apple or whatever. So let's say Apple has a pullback, right? Or for example, Nissan may fold. That's a car company in Japan. I keep seeing news of that the last couple of days. Maybe not everyone loses their position or their job, but usually people, lower down the seniority chain or, people lower down the scale do, right? You guys know this. There's going to be some people who are on the chopping block and some not. And unfortunately, not everyone can win in this particular environment if things are cooling, because this is even coming from Bostic saying, the economy is cooling and we're seeing people save less money and their bank balances are going down. And this is where I just tell you guys all the time, prepare for a stormy future. Be careful, with any things going into next year, in my opinion, because I think it's going to get really, really unstable as Trump takes office. I can just see it, from what different companies are saying, CEOs, and now we got from what Fed, this is Bostic saying. Waller, right, he's a little bit more positive on inflation, but think of it this way too. So they'll say, hey guys, things are great, inflation's coming down, it's finally, getting to where we wanted to be, that 2%. But then like you could be at a point to where it's not necessarily a good thing if no one has any money to spend, right? So I'll give you a simple example to understand this very easily. Let's say we're talking about the housing market, okay? And right now, houses are crazy expensive and the rents are way too high. And they're like, oh my God, no one has any money. And because, say, no one has any money, then prices will come down, but people still don't have any money. So even if prices were, lower than they were, just for example, lower than they were before, you still don't have enough money to buy said thing, right? So you don't necessarily want to be in a situation to where, hey, it's great, prices are coming down and things are theoretically affordable. That could also indicate, too weak of an economy. So this is where the balance is. You want to make sure people have money in their pockets and people are out still spending and making sure that the markets, be it housing or whatever, is still healthy. And that's what the balance is all about. So when I see all this stuff, I can see why you say, okay, let's cut. But the problem we're going to face is if we cut too much too fast, we may have inflation run up and then the lower classes get hurt again even more. So it is and that's why I said get back to that division of rich and poor. And I just keep seeing it in everything that I read. That's why I bring it up all the time. And that's why I bring it up all the time is my opinion. I think things are going to be, shaky in the future. So, my opinion, it's kind of roughly the same, but I try to say it all the time is I would be watching spending and really, focusing on saving and putting money aside for the future. Yeah, so that's my thoughts on this stuff. I'd like to hear your thoughts. What do you think about the Fed says? What do you think about your neck of the woods, be it employment, rents, markets, whatever? And also, what do you think about housing? I want to hear your thoughts in your neck of the woods. So that's mine, and I appreciate you watching, and I'll catch you in the next video.